What's up, guys? How's everyone doing? How is everyone today? Looks like we've had some exciting news in the overnight. I don't know what it is, but we've got some. So that's neat. What happened to CL? So there were some unconfirmed reports of explosions across Iran. Israel has denied involvement, and they seem to have been launched from Kuwait, I believe it was, or at least last I heard. But so far I haven't seen anything substantiated, just shit on Twitter. So possible like US ATACMS missiles. But we don't know yet, right? So the attacks haven't been confirmed by anybody or by the press, but supposedly ballistic missile attacks in Iran, which would be, a escalation, which would obviously have a fairly serious impact with the markets recovering on the lack of knowledge. So people stepping in and buying the dip, but I'm sure once we have some confirmation, we'll get more directional action here. Did you see RFK explaining how Trump does percentages differently? I did. Yeah. I also heard him make the statement, Americans shouldn't be looking to me for medical advice. Just interesting that the market's prepared to react so violently, I suppose. And I'm sure we would have kept going down had any of the attacks been substantiated. We're just not there yet. Yeah, what's up, Cluedon? All right, so I guess this I did mention earlier that failing to retest the prior high left us with kind of a series of consecutive lower highs. We had a bit of a rough time today clearing the prior week close. When we did clear it, we got immediately rejected off of it. Obviously, the overnight action proved out some of that bearishness, but we could see this move more. And the upside today, with the squeeze into close, was pretty substantial. I think not quite 100-point day, but it was for NQ. NQ was almost 200 points up today. So more of that leaning into dispersion that we were talking about yesterday. And that's going to be, a popular trade as we get closer and closer to tech earnings, one of which we had tonight. We had Tesla earnings tonight. I didn't really see anything come out of that was of any note. I mean, it seems like the Ponzi is ongoing. Let me see if there's any, let me see if I can find the earnings data. Had RFK been ousted much earlier than other appointees on my bingo card? For sure. I mean, he's just in there blundering around in a department Trump probably cares nothing about. Looks like revenue of about 22.39 billion, net income 477 million, adjusted EPS came in at 41 cents. But revenue was light versus estimates, so beat on EPS, miss on revenues. Free cash flow is positive. It looks like 144 billion. Vehicle deliveries were still terrible. And that's all post federal incentives. Managed, like, yeah, they're just leaning more into like the AI robo-taxi Optimus bullshit. Elon raised the capex outlook to 25 billion. So more aggressive spending. Yeah, looks like they're still trying to pivot as hard as they feasibly can into being an AI company, but that didn't lead to any net gain in the overnight. Looks like flat on close. So all those call and put buyers are going to be sorely disappointed tomorrow. And this is, the capex increase probably is probably going to be a point of weakness for the rest of the Mag7 as we continue to get reports into next week and the one after. So yeah, I mean, overall unimpressive, as Tesla earnings generally are, with a lot of bullshit, right? So anyway, obviously light crude spiked on the news of attacks and is holding a 43% gain here in the overnight, but pushed up to about 97.21 a barrel. I'm sure and that's also CL. Maybe I have Brent pushed up a little over 100 a barrel before falling back. So big moves in both of those, and if those attacks are confirmed, we'll probably get a continuation. Yields up right now, up throughout the intraday as well. We saw a push higher at the top end of the curve again, with the dollar gaining slightly. That's down in the overnight session. Commodities did pretty well today. Oil had another big day, pushed up above $90 a barrel as the negotiations look to be more and more off the table. And if tonight's attacks are confirmed, they're definitely off the table because the ceasefire will be breached despite Trump saying that it was extended. Obviously correlation got leaned into harder. That's why we saw a bit of a drop in vol. Not very much, mind you, especially for a 1% up day. But we did see a bit of a drop of vol, and we saw a lot of the tech companies moving really hard. Most of the outperformance still in tech and tech services, with financials kind of falling away. I will say the other sectors more broadly performed better today. Like producer manufacturing picked up quite a bit. GE had a very nice day, I'm sure, alongside their earnings, if I'm not mistaken. And then Philip Morris had a pretty good day. That's a little weird. I don't really see anything else. So I don't really see anything like looking very rotational here, but it looks like the three big runners are moving, and then health tech was kind of mixed. So still a lot of the dispersion trade ongoing, both in S&P and the Dow. Some of that obviously pulling back in the overnight. Tesla earnings didn't help anything out. So yeah, more of the correlation trade packing on. Bond volatility dropped a little bit alongside 3-month correlation. Leverage on the carry is still at about 10.7 at the top end, 7.33 at the front. Forward yield on volatility just kind of waffling here around -8%. And it looks like the gold upside is kind of petering out, and the surplus on that's trimming a bit. Skew flat. As far as breadth goes, I mean, 20-day movers fell a tiny bit, but 50 and 200 picked up. So still a lot of push into those tech stocks that didn't sell off that hard anyway. So for IORB spread is still broad, and correlation's continuing to rise. So there's still some demand for long vol. We just haven't gotten a good spike in volatility yet. We did get a little bit of a move here in the overnight session, and that's brought correlation up. I think VX spiked to about 21, but VIX 3 months still sitting at 21. VIX back down below 20 again. Leverage is about the same. Upside volume today was pretty good. And there was a decent amount of it, so we broke out of that kind of downward consolidation a little bit. But as far as breakouts go, this is the lowest volume out of the last 3. So we are losing steam, right? So these bounces, these dip buyers, they're less and less volume each time, and that's kind of how I use this. I don't generally use it as like an indicator of bullish or bearish. I use it kind of as an idea of trend and the amount of money people are throwing in either direction over time, which I find somewhat more useful. We didn't retest the all-time high, and still short of that. But if the overnight move holds to the downside, and we slip, back down towards that gap, which we really need to fill to confirm a rejection, that's where we'd confirm. Anything out above the all-time high, bullish. There's a little bit of a trend up around like 71.85-ish that we should probably be paying attention to. I think maybe Friday it's around 71.95. But that would just be more bullish if that were to break. So pretty much anything to the upside from where we closed is pretty strong. However, the prior low here where we started to slip back, I guess this was yesterday. The prior low here at 70.50, that's probably still fairly important. Falling below that, we fill the gap to the downside that we left back on the 15th, and then there's more gaps below that, and so we would just go level by level at that point. 7,000 is kind of important as a level here on a ES. That was the prior all-time high that has not been retested yet, and then also as we drop to the downside of this, we do get closer to the JPM calls, which could have an effect as well. What's that level relative to ES? Hold on. 7,000 would be like around 70.34, which is a support we have here, a support resistance line that we have here on ES. It's roughly right there, 702, which is about 34.50 on ES. So right around there where we got that little retest and rip up. That's where we're looking. And then anything I didn't get covered here? No, I don't think so. So we're gonna flip over to Gamma Strike real quick. And we're going to take a look at some of the stuff there. So here out on the weekly neutrals, we're seeing that Gamma Max is still kind of just rocketing away from spot without spot catching up to it. This is usually a good indication that calls are being sold farther out of the money. However, we did get more buying today, so we got a little bit of a reversal in DEXA. That popped up a bit, but total delta continued to decline. Gamma popped a little bit with today's upside move as well. Not any significant reaction out of Gamma neutral. Move my head there. Out of Gamma neutral or Delta neutral. But VN is also still flat, so we're still not seeing a lot of short-term put sellers step in either, which means that this is still largely supported by in-the-money calls. And if those give out, there's quite a lot of downside as that delta gets stripped away. On the SPX chain, things aren't looking so great. Gamma Max is continuing to rocket up post expiration. Now VN is starting to move up with Gamma Max, which is usually not a good sign. And then GN and DN are both moving up. So there's some profit taking on the longer dated positions. DEXA is still negative, but it did pick up today. Gamma picked up a little bit today too. And so if we look at both chains together, that should give us a pretty good idea of kind of where everything lies. This is interesting. We're above the conjoined Vega neutral level, so this is the market maker is positively exposed to Vega up here, and part of what supports that upside move is the positive gamma, and so as GN rises, that spread in positive gamma narrows, and so there's less supportive gamma over time. If we go back just a couple days. Total gamma exposure was at like 99.75 billion. Now it's at about 65, so it's about 30 billion drop. And as this moves up above this, the net gamma exposure is going to be negative relative to the Vega exposure. And so I think when this crosses over, we start to lose some of the supportive gamma that's holding us up here, and it becomes more likely that the market sells off back towards VN, in a mean reversion fashion, because structurally there'll just be less support. I don't know if this has actually happened before. I think there was one other instance of GN getting kind of above VN. I've really got to dig for it though. Maybe not. I think there was one point where I at least got close. This is extremely uncommon. Yeah, like here, there's a few moments where it almost taps. I guess like right here, it gets very close, and you can see, how price just kind of gives away. That's kind of how I would expect this to go. As that spread narrows, that's not great, especially when the index is trading above gamma neutral. So watch out for that as that crosses over, because it's almost there. I think they're just like a few dollars off. And as GN draws up even more, unless Vega neutral keeps pace with it, that's going to act as a point of mean reversion, which is all the way down at like 69.35, which is quite a ways from spot right now. It would be closer to that like second down gap to the downside. And then also let's take a look at this, because this has been kind of interesting. Not a big bounce back in Skew today. 10-day Skew got steeper, so put like downside convexity demand across the short term picked up. Skew was actually a little bit better on the 10-day yesterday than the 30. 30 kind of bounced back a little bit, so 30-day puts got slightly cheaper, and vol came down. Some of that backwardation closed out, but just barely. Right, the 10-day IV is just it's just 9 points below 30-day IV. So this is far from being like in comfortable contango like we were back here on the 17th. This is still quite a lot of stress on the front bucket. And obviously VRPs on the 30-day got a little bit more negative, but there's still a little positive padding on the 10, but that's thinned since the last time. Out here that was much better. Now it's a little bit thinner, so that VRP less attractive than it was even yesterday, for anybody on the short vol side of things. And I think that's about it. So if you guys have any questions, I've got a few minutes. No? Oh, hi. How you doing? How much longer can this dispersion trade hold up? Probably until we're past tech earnings. And even then, it doesn't always substantially weaken. I mean, if tech earnings are good, it'll strengthen, right? And then if they're mediocre or middling, it'll weaken a bit, and then it'll pick back up as we move into Nvidia's earnings, which are later in the season. I guess like the big break would be if tech earnings are, significantly worse, which they should be, or at least capex should be worse, and cash flows and balance sheets should not look as attractive. Yeah, and a lot of it just depends on explosions tonight. Is my SPX 7005 going to print? That's a terrible question, but maybe. I mean, you better hope Trump's launching ballistic missiles at Iran right now. Which we still don't know, right? Yeah, broken ceasefire would negate pretty much everything. I mean, the dispersion trade will break down. It'll be forced to break down. Worse yet, it'll squeeze. So all those people long vol and pumped into dispersion, they're going to get fucked and quick, which is dangerous. That's how things break. I mean, if we look at correlation, actually, this is a great way to look at this, right? So if we look at the downside over the last few months, it was a very slow, methodical breakdown in correlation over time, right? Like correlation very, very slowly rose. This was, if we hold on, I can kind of show you guys with the index how this works. Let's actually I don't want this on the same percent scale. Let's do it new scale. Yeah, let's do it like this. So this way we can just see it better. Okay. So you see there's a really, really slow walk down as people went long index vol and fear built. Green line's the SPX. And then we see, an immediate snapback, and this is the short squeeze, right? Where everyone immediately shifts long equity vol, short index vol. And we rocketed it up, and now that's starting to turn around. But if it turns around now, it's going to be less expected, and so the downside will be more immediate. Oh shit! Sorry. I forgot to switch the screens. So this build up from March through April, this was very, very slow. And we got kind of stair steps to the downside. But because it's reverted back so quickly, if this were to, and a lot of this is, 90-day and 30-day positioning. So if this were to break the other way, we squeeze back down, right? It'll be harder to let it move slowly because everyone flipped over, and there's almost nobody long index vol here. I mean, a little bit, and what we care about intraday trading, but the macro overview, no. Very, very, everyone's very bullishly positioned. And with everyone very bullishly positioned, if something bad happens, you sell off hard. I mean, we just went down almost 1% on some unconfirmed rumors. Anyway, I hope that helps. Thank you guys for tuning in. Remember to like, comment, and subscribe. Lots of comments. The more you comment, the earlier I'll show up to tomorrow's stream. Hey, I'm long index vol. Nice. How's that working out for you?